I'm Priscilla Barrera with the Investing News Network, and here with me today is Rodney Hooper, who's partnered at RK Equity. Rodney, thank you so much for joining me today.
Thanks very much for having me on.
So I just wanted to start with your thoughts on the lithium market and what do you expect for the supply-demand balance going forward? Are you still forecasting a structural deficit for lithium in coming years? And maybe what moves do you expect to see in the industry to be able to meet the increasing demand you're expecting?
So, yes, I still have a structural deficit going forward. I've rerun my models. I've gone through every project with a fine-tooth comb, and the numbers still don't add up. Again, I keep mentioning it, the only way to get this market in balance or in oversupply is to have an excess of upstream investment, and we just haven't seen that. We haven't seen enough projects permitted, we don't see enough projects under construction, and if anything, we're seeing new projects that were assumed to be coming online to already be slightly behind schedule. So I don't see that changing. If you want that to change, you need mass investment. It is possible to get out of structural deficit, and Chris Ellison has mentioned that there's potential to have extra trains on Wodgina. We'll have to see how that material goes when it ramps up, and waste and so on. But so there are potential projects that can help offset the supply deficit, but for now, looking out, I don't see it in the immediate term. The only thing that can balance this market is demand destruction, and I'm sure we'll get to that with this latest rumor that's going round. Supply couldn't work. Now it seems that if there's any sort of market, I won't say manipulation, but movement is now to talk down demand to try and balance the market.
All right, and before we go into that, we've seen high lithium prices benefit producers this past year, with some announcing these restarts and expansion plans. Are you optimistic about lithium prices as we move into 2023? And maybe at what level do you think prices should remain to be sustainable?
So 2023, I have a supply shortfall again on the basis of about, I think, 13.7 million EV sales for 2023. So, Europe doesn't have an adjustment in the CO2 penalty levels until 2025. So I have written about this before. I didn't expect huge volume growth, and we haven't seen it this year. So next year, I don't expect mass volume growth. But China obviously is doing extremely well, and they're looking to move ahead, and I think become a big exporter, and we saw it in the presentations this morning. Xpeng, Neo, etc. are opening up, BYD are opening up into Europe. So, China as a production hub, that's another question altogether. And then obviously the US and new models coming on stream. I think the Cybertruck is due to come online for mass production by the end of next year. So new models coming on. I think the US could, and rest of the world could also be quite a strong year. We'll have to see what the impact is of recession. Does everyone push back the purchase of a car by a year? Is it an essential item? But we have seen quite low auto sales, so the fleets are getting older, so people will be replacing. My sense is that they would want an EV. That's what the surveys say. So on that basis, I expect 2023 to have a supply shortfall at least as big as this year, if not bigger. So I have readjusted my price forecast like everyone else has, and I see around $65,000-$70,000 a ton certainly as a price holding. So I don't see any sort of a dip in the next, in fact, till 2025. So that's my view, is that the market will hold and will stay up until then.
All right, and I just wanted to touch on some recent news, actually. We had last week Goldman Sachs reiterated its bearish call, saying that this overcapacity and slowing of electric vehicle sales should put downward pressure on lithium prices next year. And we also saw lithium stocks take a hit this week, also on the back of rumors in China about a major cathode producer cutting back production. So from an investor perspective, are you still optimistic about lithium stocks this year? And is this a buying opportunity for investors looking to jump into this space?
I think, the lithium shares have run, so one needs to be selective. I just released a report today, and so I'll give the caveat that we do advise the company, but someone like Piedmont, I think, is still exceptionally cheap relative to its NPVs and its asset base. So I think you need to be selective, but I do see the market price holding for some time, which means that anything coming into production in the next while is going to enjoy high prices. But some of the shares are now reflecting those high prices, so I think you need to be selective. As far as the Goldman Sachs is concerned, I'm reiterating the issues I have with the report, the new version of the report. The first thing is, and I keep repeating it, is lithium production does not mean battery-grade supply. They're two separate things. Qualification timelines are still tough. Everything that's produced is not qualifying into the supply chain, so it's not the same thing. I was slightly higher on battery-grade demand than they were for this year by about 40,000 tons, which doesn't sound like a lot, but they were at 8,000 ton deficit. But if you add another 40 to that, it changes the picture by quite a bit. So if you adjust lithium supply to battery grade supply and you compare that and a slightly higher demand number than what they had, then their restocking number I have is a lot lower. So I don't think that the industry really restocked much at all this year, which means that in 2023 that rolls forward, and then that changes all of their forecasts in terms of being at kind of in balance next year. It suddenly puts you in deficit. So I don't agree with that number. I think it doesn't mean necessarily that prices will go up. Is there going to be demand destruction? Well, China has the power to slow down EV sales if they want to, but that would run counter to what I think is a state and company sort of interrelated objectives. And you've seen what BYD has done. BYD is now all electric, and their numbers are up 250% this year. Are they going to slow down next year? I don't think so. And as I said, if I look at it, where I live in Africa, a lot of the cars are sent in from China, so I see that they will want to export a lot, so I can't see them slowing down on a global strategy to sort of get ahead and be the one to sell into the regional markets. So once again, I disagree, but it doesn't mean that every share is going to make new highs. I think some of them have run hard, but there is selective pockets of value, and I'm sure we'll discuss it as well, but I still think that early stage companies that can drill up have a lot of opportunity. If you're going to see elevated prices for most of this decade, which a lot of us believe that you will, not necessarily at these levels, but high enough to be very profitable and well above what's priced into the market, my preference is still, I think there's still value to be found in some of the early stage companies.
And now moving from the micro views for lithium and looking at the macroeconomics, we've been in a season of high volatility, inflation, recession fears. Has that impacted your investing strategy, and how are you investing in lithium stocks today compared to a few years ago?
Yes, I guess, it's been hard to read. We've had a lot of misinformation, and still lithium stocks price in a very low. They price in almost like the iron ore futures used to, like a backwardation. Everyone assumes that there's this cliff of collapse in prices. So I'm more comfortable now that we've seen disclosed ambitions from each of the OEMs as to what they want to sell, and the downstream spend, which has built out hugely in cathode battery and in EV manufacturing, to say that there's a lot of capacity to take additional lithium downstream because they've spent a lot of money and they plan to spend a lot of money. So I have more comfort in early stage plays because I think you have that time. Obviously, it's a question of preference. We still like tier 1 jurisdiction where you can get permitted. We backed Canada a while ago. It had a stop-start, but we think in terms of clean energy and so on, and good resource, that Canada is going to be a major player. Australia is also, Western Australia is good for permitting and gets up and running. So those are two jurisdictions. You've obviously got other areas that may or may not pick up, and you have individual projects like Atlantic, which is close to port and so on. We still think landlocked plays might face a bit of a challenge, and like AVZ is in dispute, so great asset suddenly finding itself embroiled in it's suspended and embroiled in a battle with China. So previously, I think, because the market was so tough, and in a bear market you had to really pick companies that would survive. And then we're going to be producing now, but I think now that the skies have cleared, there's an opportunity to stick with earlier stage plays, because you've got Europe, cancelling new ICE vehicle sales from 2035, which means by 2030, realistically, no one's going to be buying an internal combustion engine car. And the same for parts of the US or the whole of the US. So it's all shifting. So that you've had clarity on that as well. So I don't see the demand in terms of recession and a broader impact. We haven't seen it yet, although I see the latest wait times in China for Teslas is cut back hugely. It's just, I see a week or some of it. So that has so that something has shifted there. So for now, we haven't seen, auto sales are a bit of a concern overall, in that people are buying less cars, but I'm assuming they're waiting for EVs, so we'll need to see that confirmed. But we haven't seen a major headwind from demand destruction from tough economic global conditions.
And, with this high lithium price environment, there's also expectation of new companies joining the sector, new projects, acquisitions, and so on. You touch on the fact that you actually like early stage companies. How much do you usually allocate to your portfolio? Are you interested at all in more advanced companies today than a few years ago?
So again, it's always a question of where the perceived value sits in the market. So someone like Piedmont, which is more advanced, as I said, I've just done the report, I think if North American Lithium successfully restarts early in the new year or in the first half of 6 months, the market cap is below just the NPV of their JV percentage right and offtake agreement alone, and then you get all the other assets for free. So something like that. But that does, that happens to be, an advanced and ready to go. Whereas some of the other companies that are about to start producing in spodumene have run really hard. So you've priced in perfection on execution there. So it's tougher. So I think it depends. It just depends company by company and where it's at. But there are some producing companies that are trading on quite low multiples, and certainly EBITDA multiples going forward if you believe the price is going to hold, and generating cash flow. So you've got to look at it company by company. So I'd say yes, there are some advanced companies that don't look particularly expensive on a near-term basis on valuation metrics, and others that do. So wherever you find, I just look at what my pricing deck is like and plug that in versus production and see what's cheap out there.
All right. And I also wanted to ask you about how geopolitics have played a role in the lithium sector this year. We've seen U.S. take some steps to strengthen their lithium supply chain, but also Canada. And just recently, we saw the Canadian government ask these Chinese companies to divest from critical mineral companies. What were your initial thoughts when you heard this news? And I guess as an investor, how much do these moves from governments impact your investment strategy?
So yeah, it is interesting because the US has chosen the carrot route. They've offered very good incentives. They've got the grants. They've also got the tax breaks and so on. So they've decided to do mostly carrot to incentivize the battery supply chain in the US. They'll still need to do permitting, but it's a good start in terms of what they've offered. Canada, on the other hand, looks to be all stick. So we're waiting to see if there's more carrot. Interesting moves in terms of what they blocked and where those assets sit with the companies that in question. They're not Canadian-based projects, they're offshore projects, so that's pure political influence stepping in. We did see that happen with, if I remember correctly, with AVZ and the Australian competition, or some ruling that they had about someone buying into AVZ even though it is a DRC asset. So in terms of jurisdiction, then the question then is what you're asking is if it's listed in Canada, it could potentially be threatened rather than the asset itself being there, which I think is a given. That's a no-go sort of area, although offtakes can still be signed without any ownership, so you could still end up seeing. So it'll be interesting to see if there's any political coercion going on in terms of don't sell to China as a sort of policy, but bearing in mind we know where the conversion capacity is and who can buy it and who can process it. So for now, that isn't. It seems an interesting a choice to make, given that there's no downstream processing yet in North America of any meaningful size. So I think you said, does it impact in terms of investing strategy? I mean, yeah, we like assets that will supply into the North American supply chain if they can. We think it could potentially have a premium for various reasons, and that's not just lithium. That can be graphite from Canada and so on, as long as it's anode quality, and nickel. So those that can do that. But in the end, I guess it's anything to, as long as it's going to be profitable. But the question is, are there going to be gates or material passports or battery passports and so on that will be implemented down the line that are going to affect your investment? I think that is something to consider.
How much does jurisdiction play a role when it comes to choosing a lithium stock? I know that you mentioned you like Canada, Australia. Are there any other areas that you look at when looking for lithium projects?
I think as long as the governments are conducive and you've got the potential flexibility to be able to sell your product at good prices, it's okay. So if the infrastructure and so on, again, like Atlantic Lithium, where it's located relative to port and so on, we'd stayed away from Africa, but that we found pretty compelling. As what it has as a plan, and for all of its political woes, Argentina still seems to operate well as a lithium jurisdiction. They still, there are challenges, but given those challenges, it still seems, people operate. But in order to make the commitment to build a lithium project, you're talking about a 20 to 30 year commitment, so that's a very long time horizon to take a view on a jurisdiction. So it is easier to go with areas that you think are going to be stable through that time, and Australia and Canada must be about as high as you can get. So there are other areas. I mean, there's prospective areas in Brazil around Sigma. Africa is definitely going to have a lot of, I think, in terms of deposits, but you've got to look region by region. Somewhere like Africa, you have competition between Chinese and non-Chinese buyers, so it could mean a higher price, whereas, North America and Oz, it's kind of non-China as potential buyers is the truth. So that alters the sort of the possibilities of what a project could sell for. So it's complex, I guess, is the answer here. But my preference is if you still see value and in terms of a long-term horizon, and you still see a lot of uplift, and you still see the potential for very prospective assets to be found in jurisdictions, that are tier one, then why wouldn't you go with those? And if you look around, if you look at some of the stuff that's coming through in Canada in terms of the size of the deposits that's being found and drilled out, those are good. And the same with Oz in Western Australia, and like Global Lithium has got MinRes as a partner. MinRes has got ambitions. You get the feeling that these assets will be mined, so you have that comfort as well as permitting and the will to develop them. So that's always helpful.
Moving away from lithium a bit, has any other battery metal caught your attention in the past year? And if so, why?
So if you look at nickel in the near term, that's been moving. You're down to days of inventory. So that is something a lot of people, when they originally had quite conservative estimations on EV sales, didn't have electric vehicles as a major component of the nickel market. But of course, that's all turned on its head. And now EVs represent a big percentage of nickel demand, and they will continue to rise going forward. So, and this is against the backdrop of quite a lot of COVID shutdowns in China, where you saw the iron ore price go backwards. So you've had steel production easing off. Now that's coming back online. We're down to days of inventory. The price has been moving. So that's one I think that is obviously graphite we've had in the last 2 days here. I think all the battery metals are going to come under pressure, but it looks as if nickel is ready to roll. We had that spike, the whole LME crisis, and some repercussions on that. But definitely that's one to watch. And there's also, again, the question of places like Indonesia. If they can get their act together, they could be a supplier. A lot of people have concerns around ESG, but regional assets, again, US Talon got a grant from the DOE, so we think that one jurisdiction, domestic supply is obviously going to be. They've got an offtake with Tesla. It's going to be popular. So nickel is one, and I think graphite also. It's a question of timing. And they showed, Benchmark was showing about what percentage of the overall market batteries represent, and that's also now shifting. And in the end, where EVs will be the dominant demand factor, but nickel I think is getting there quickly, and that's one that I'm keeping an eye on.
Rodney, my last question for you today. When you look at next year, what trends do you see in the battery metal space, or any other thoughts you want to leave our investor audience today?
Yeah, I think things for investors to look out for. I still believe that OEMs are very light in terms of their supply chains getting through to their stated objectives of production. So, and I think the reality of concerns and supply disappointments in terms of timelines for alternative production methods and technologies and so on, I think that's going to come home to roost in the next year. So practically speaking, you have ESG concerns and so on, and a lot of OEMs have skewed away from conventional flow sheets because they've wanted to be seen to be being more green, or whatever you want to call it. But the reality is, that's probably the most reliable supply chain. So I think M&A is going to kick through. It will continue next year. I think people are going to have to make bold moves. You've seen Tesla. By 2024, 2025, I'm not sure that they have their supply chain sufficient for a 50%, coming off a high number. And they're not alone. If GM and others are really going to be as ambitious as they say they are, so I expect more M&A and offtake deals, and that could underpin, again, lithium equity valuations because of what you pay. The deals that we've seen, you saw what Rio paid for Rincon, eye-watering number. It was up 8 or 9 times from what the asset had gone for in 2019, and some of the others. So I think we're still going to see strong M&A and strong pricing, and investors, there is where near-term production assets do have a lot of appeal, because they will be the first up for acquirers to be looking at to secure their supply. Deficits widening, the structural deficit by 2025, I think that number, unless we see some miracle happen, we're going to be bigger. So any asset that can be up and running by 2025, I think, is going to be something that that people should look at now. It's worth looking at.
All right, Rodney, thank you so much for joining me today.
Sure, thanks very much for having me, Priscilla.